Emerging markets guru Mark Mobius calls the slump in shares of so-called BRIC nations a correction in a bull market. He is in the London office right now with our own Francine Lacqua. Francine.
Thank you so much, Deirdre. And there's so much talk about Hungary, of course, pushing stocks down on Friday. Now, let's see if Mr. Mark Mobius actually shares the concerns of a lot of investors that this credit crisis, the sovereign debt crisis, will spread. And Mr. Mobius, thank you so much for joining us here today. Now, we're in Europe. Of course, a lot of the focus is on Hungary. Yesterday, there was a backtracking from the government saying, actually, no, they're not nearing default. But on Friday, they said they were. Was this a leak just to warn the population of what's to come?
That was meant for domestic consumption, not for international consumption. So they're getting people ready for the hard times, basically. Unfortunately, the cat is out of the bag. But it's no surprise because a lot of us believe that with Greece in trouble, there would be further announcements in other parts of the world, particularly in Eastern Europe.
So are we going to see Hungary actually take some austerity measures just like Greece? Today they said, well, we're not Greece, but actually they have a huge budget deficit. How are they going to keep that under control?
Right. Their numbers are not as bad as Greece. But, for example, debt to GDP is much lower than Greece. But going forward, they're going to have to do something to cut government spending. And not only Hungary, but other countries in Eastern Europe. So definitely the pressure's on.
And what does it mean for investors? Would you, for example, go into the country today and scoop up some bargains because we saw stocks fall, or would you wait for lower valuations?
Some of them have fallen quite a lot, and they're looking interesting. So we're definitely looking at them very carefully.
So a crisis for you possibly represents an opportunity. What other countries in Eastern Europe would you be looking at?
Well, Poland, Czech Republic, and even Russia, although Russia has not been impacted so much, but we would want to look at Russia. And then further afield, countries like Romania, Bulgaria, and so forth. Those would be interesting.
But, Mr. Mobius, you'd be buying stocks on the presumption that possibly they'll put austerity measures in place to keep the deficit under check, but that we won't see a double-dip recession in these countries.
That's right. We believe that globally there will not be a double dip, okay? Now, individual countries will have their problems, but equities will react to these problems in a downward fashion, of course, as they already have done in Hungary. We've seen falls of 20% or more. And in that kind of scenario, there are great opportunities to buy from a longer range point of view.
Will the sovereign debt crisis spread further afield, not only in Eastern Europe, but in other countries?
Yes, because people are focusing on sovereign debt now in a big way. So they're going to be examining all these numbers. And if you look at some of the numbers, they're not very good.
Yeah, and some of them, I mean, without actually blaming anyone, a lot of them maybe weren't as transparent as investors would like them to be. Do you still believe that actually now is a good time for a lot of these European countries to get in the euro, or is the euro at a point where, well, there is no eurozone?
From a long-range point of view, I think the euro is great, and I think more countries should join. But they also have to comply with the Maastricht criteria, which means they've got to bring down government debt, they've got to be much more transparent, et cetera, et cetera. So I think it'll be a wonderful thing longer term. Now, of course, there's pain and suffering that they have to go through. But after this, it'll be very, very positive.
Now, we saw the G20 practically two opposing philosophical views on how to deal with the crisis. On the one hand, Timothy Geithner saying, well, we have to continue spurring on the economy, but Mr. Trichet saying we need fiscal austerity. Who's going to be right at the end of the day?
I think Trichet is right in the longer term, but I realize what Geithner is saying, because I think Geithner is worried that the U.S. will be pulled down along with Europe. So their philosophy is that Europe and the U.S. have got to stick together and help each other and make sure this crisis does not get too serious.
One last word possibly on actually where you would put your money and when. If you are looking at these Eastern European countries, do we need a further fall for equities?
No, I think now we can begin nibbling and looking at some of the companies. But if we look at growth, Asia is still where it's at.
Mark Mobius, thank you so much. Great to speak to you.